This is the market with Gurvinder, and today we're going to continue our topic that we spoke much about in March, which is we have some of the data now in terms of March home sales and pricing, particularly in Toronto, and obviously this is playing out in the rest of Canada as well. In addition, we'll talk about some of the buyer sentiment, what's going on with buyers in the market. Also, we'll look at some of the more in-depth data in terms of what we saw in March, and obviously what we potentially could see in April, as obviously we need to prepare. If you're in the market to buy a home, sell a home, or you're just, trying to understand the market, trying to analyze it, you definitely want to watch this video and definitely want to stick around for the whole content here, as we're going to go through some obviously perspective, some data, and obviously summarize this of what this means to you and why is it important. So I definitely made some videos in the past month here of what we saw in March, when we saw a bit of a slowing down and how the market has turned. So definitely, check out my channel, like, subscribe, comment. I appreciate some feedback, and definitely stick around. And again, I'm a wealth management advisor. A bit of this is my perspective. A bit of this is obviously the perspective of the writers and the threads from Twitter. So always seek, professional advice or a trusted advisor depending on, your knowledge. But again, this is going to be a bit of my perspective. I'm going to share with you what I think is important. So I hope you find it helpful. So why don't we kick it off here, and we'll start off with March home sales. This is an article by Global News, and as you can see in the title, March home sales in Toronto area slid from February, but still up from last year. So you can see March was a pivotal month. The market has changed. And I believe that this, obviously the first rate announcement has, made an impact. The next rate announcement I'll share with you as well shortly, and a little bit about that perspective as well, how it's coming up. But let's kick it off into what we saw in the Toronto region for March. So prospective home buyers in Toronto region saw a slight dip in home prices last month, but properties were still selling for an average of $200,000 more than they were last March. So comparing the year prior, we know that real estate market is up across the country, obviously more in Toronto and the GTA and Ontario. The Toronto Real Estate Board revealed Tuesday that the average home price in the market reached almost 1.3 million, up 19% from 1.097 million in March 2021, but down about 3% from 1.334 in February 2022. So that's obviously a big, I'm not going to say big, but that's obviously an impact in the market. This is now signs of, kind of things slowing down, things are changing, buyers having more options, sellers is taking longer depending on the type of home to sell, and obviously how many, openings and viewings you're having. So that's very evident of the market, how it's changed in March here. The numbers signal that some of the heat is creeping out of the market, but likely not fast enough for buyers. So prices are still sitting obviously on the high end, right? If you're looking for a large correction, that obviously is not happening based on what we're seeing today. And there is some slight variation here in the numbers, but not the drastics are. But who have sat on the sidelines hoping the spring market would deliver greater relief in prices. Around the springtime, it's usually when people want to sell. Obviously, the weather is gotten better in Canada. So, there's going to be more, historically, there's more, homes for sale. The numbers were impacted by the surging inflation and the Bank of Canada upping its key interest rate 0.5% at the start of March, though many buyers secured mortgage rates in advance of the hike. When they waded into the market last year, they found on a year-over-year basis, the average price of a detached home soared by 21%, while semi-detached were up by 26%, and townhouses rose by 25%, and condos and apartments edged up 20%. Competition was strong across most neighborhoods and housing types, but there was some positive signs, noted TREB's chief market analyst. So this is what I meant. There's still competition. You're still going to get a couple, bids on a home, but it's just that activity, that level of high FOMO is obviously less and less since the start of the year. We did experience more balance in the first quarter of 2022 compared to last year. He and Treb pointed out that last month's sales bucked seasonal trends by sliding to 10,955, down 30% from a year ago, which was almost about 16,000 sales. Those sales amount to the region's third best March and second best first quarter. So you can see the numbers are still high compared to historics, but we're hampered by a lack of supply. New listings for the month total 20,000, down from 22,000 from last March. There still is not enough supply to satisfy current buyer demand, so that's why prices are very stable, or they just decrease a tad bit because still there's buyers in the market. Said Toronto broker Kelly Heaps in an email ahead of TREB's release. The end of March, increase in supply that happens every year will help, but demand still outpaces supply. I expect April sales to remain strong. So again, that's telling a bit about what we can expect for April, as we still know there's going to be more homes for sale, but there's still a lot of buyers out in the market. But again, things have changed, and they're going to change more next week, which is April 13th, and I'll tell you a little bit more about that very shortly. So our next article here, I want to talk about the buyer sentiment. What are buyers saying today? So this is an article by, what is this article by? Financial Post. So twice as many Canadians putting plans to buy a home on hold, and here's why. And just read this comment here. The only year housing affordability was worse was 1990. And you can recall from historics, if you were not around, weren't born, or were just in toddler and diapers. 1991 was a large correction in the real estate market, particularly Ontario, obviously being the economic hit hard, but obviously all across Canada. But those were different times. But let's see if it's what the buyer sentiment is here. Good morning. Could buyer fatigue be setting in at last amidst Canada's unsinkable housing market? A poll this week by Scotiabank suggests so. According to the survey, Canadians are less likely to buy a home now than they were at the height of the pandemic. You know what happened during the pandemic? Everyone wanted to buy a home, so obviously buyers are taking a step back now. Worries about the rising cost of living, so inflation, obviously, interest rate hikes, which they did in March, expecting here in April as well. Stock market volatility and economic uncertainty from the Russian and Ukraine war are all piling up on the smoother home buying dreams, I should say. Twice as many Canadians are putting their plans to buy a home on hold. Of those surveyed in 2022, 43% they were shelving plans, compared with 33% in 2021 and 20% in 2020. Especially among the younger generations, obviously given the down payment and the home prices we're seeing today. More than half of Canadians aged 18 to 34 say the current economic environment has hurt their finances, causing them to delay home ownership. 90% believe that home prices will keep going up for the next 12 months, and 62% are waiting for them to come down before they buy a home. Canadians have plenty to be exhausted about. The market has just been on fire, but so much competition, and obviously the price appreciation has been so drastic. So it's never been a worse period since 1990, as you can see here by RBC's housing affordability measure. Rapid price escalation in the early months of 2022 has already raised the bar to impossible levels for many homebuyers, said Hogue in his report. Bank of Canada interest rate hikes this year. RBC expects 150 basis points will push home prices, costs even higher. It now costs a household in Vancouver 73.9% of its income to own a home. In Toronto, it's 68.6%. Think of that. For a mortgage to qualify, you need to, you always talk about these numbers, GDS and TDS. Usually those are around 44, 39%, and here we're talking about 74 and 69% almost. A 1% rise in mortgage rates will boost payments by $350 a month for a standard $775,000 home in Canada, said Hogue, about double what the increase would have been 10 years ago. It's no surprise that Scotiabank's poll found that almost 60% of home buyers are choosing to stay put and renovate their place rather than buy a new one in 2022. And that's up 56% at the peak of the pandemic. More Canadians too, 35%, are looking to move out of their city this year in order to get more housing for their money, compared with 29% last year. So much in this article. Buyers are obviously, reassessing the pricing. They're even reassessing, should we live here? Is there another opportunity in Canada or the US? And just on interest rates, the next announcement is March 13th. They're expected to increase that 50 basis points. So that's 0.50%. That would put the overnight lending rate for the Bank of Canada at 1%. If you have, I'm just going to talk about prime. If today prime is 2.70, if they go up 50 basis point, prime will be 3.2%. That's obviously going to affect variable mortgage rates, and we're seeing fixed interest rates, almost at 4%. They will be shortly, but you can still find some deals between 3.5 and 4, or I would say 3.5 and 3.75, depending on the financial institution. So that's on the buyers. Now let's look into the data from March a little bit more. This is a Twitter thread by Scott Ingram. He's, I showed many times before from Scott Ingram. He's definitely driven on the data, and that's why I love to bring this information to you. So, couple quick observations from the NewTrep stats. Yes, sales down 30% from last year's banana records, still the third highest March ever. So you can see here March sales activity was, as I shared previously, was 11,000, almost 16,000 in March 2021. What I wanted to show with you here is what we're seeing is de-acceleration larger in average prices, where GTA year-over-year average price gains slowed from 27.7% to 18.5% from February to March. So that's a clear indication the market has changed. Now the question is, will the next interest rate continue to affect the market? I think so, but really time will tell, because obviously we know Toronto's real estate market has been strong for many years. So it's a question of how quickly, what's the impact, etc. What else did I want to show? I just want to show this chart here as well. Year-to-date sales have dropped off more quickly in the 905 compared to the 416 for all the low-rise housing types, but they were growing faster. In the urban exodus days. So what they've dropped in now in terms of year-to-date sales, they obviously grew that much faster during the height of the pandemic. But just let's look at these numbers for the 416 and the 905. You can see here for detached homes, the 905 sales decreased 30%, whereas 18% in the 416. Year-to-year percentage for semis, 20% in the 416, 30% again in the 905. And for townhouses, 21% in the 416 and 24% in the 905. And you're seeing obviously these numbers. You're seeing sales, obviously the number of sales down. As I mentioned, buyers are kind of stepping aside or rechanging or rethinking their plans, and obviously the price and the sales are obviously showing in terms of what these numbers are. So this is, I think, clear evidence of obviously what's happening. And I just put, these are my comments here in this this thread. Is curious to see how this trend unfolds, a one-off or a new cycle. What I mean by that, are we starting a new market cycle for houses? Interest rates and home prices have an inverse relationship. When interest rates go down, home prices go up. Historically, when interest rates go up, house prices adjust and they kind of come down. The question is how much price change are we going to see? And this very big question is, how much is the Bank of Canada going to raise in terms of interest rates? Are they going to be very aggressive, or are they going to play it slowly by a quarter base or 25 basis points rather than talking about 50 basis points at this time? The last piece or Twitter thread I'm going to show you is this from John Pallas. I've shown him many times, same with Scott Ingram. He runs his own real estate firm here in the GTA, which is Real Office C Real Estate, and his perspective is fantastic, and I just want to share what we're seeing a little bit more closely with this data. Interesting to see low-rise prices actually downtrend versus last, or downtrend, trend down versus last month, sorry. I haven't looked into the data closely to see what is behind this, but I can say anecdotally that we are seeing lower prices for some homes and in some areas versus recent comparables, so just recently compared to past prices. So let's look at this. This chart is going to tell you a lot. The average sale price for houses sold in the Greater Toronto Area in March 2022 was 1.6 million, up 21.3% over the same month last year. But let's look at this data. What is this just showing here? Turn around. I'm going to zoom in a bit here. So you can see this is the Greater Toronto Area. Obviously, this number has been trending up in terms of a price appreciation or average sales price, and you can see this bit of a dip. Now the question becomes, are we going to see a dip going down, or are we going to see just a tad bit and go back? And that's the question, right? Obviously that's a $1 billion question, and time will tell how that kind of unfolds. A little bit more from John here. Why would a seller today sell for less than recent comparables? As I told you, you were getting more prices, or your houses were selling for more in January and February than they are in March. We know that sellers are stubborn, which is why prices are usually sticky on the way down. Sellers are going to stick to their guns. Hey, my neighbor's house sold for 1.2 million. I expect 1.2, or if 1.3, because home prices should continue to go up. But many of today's sellers bought a home already and have to sell in order to close on the home they just bought. Many don't have the luxury of holding out for higher prices, as if you're looking to move into your next home, right? You're trying to sell your current home, trying to go to the next one. They are also seeing fewer showings, as I mentioned, and fewer offers on their home, and other homes are playing it safe by selling, even if it's for less than what they expected. We saw these dynamics play out in the second half of 2017. So the last time there was a correction in the market was 2017. That's why he's referring to 2017 here. What's interesting is that the market today is still relatively tight. We still only have 1 month of inventory, and while new listings have picked up, active listings last month were still below historical norms. The supply is still not there in terms of individuals wanting to sell their homes. This is a tricky market right now, especially people balancing buying and selling at the same time. People need to constantly revisit the buy versus sell first question and to make sure their expectations are realistic. So, this is a changing market. It's a bit of uncertain in terms of buyers and sellers. Their expectations are maybe from January to Feb, and it's time to adjust because the market is adjusting. So that's in terms of the contact I want to share with you. The three biggest things I want you to take away here from today is that, the market in March adjusted. We're seeing less home sales, and we definitely saw a change in price, which is good from a buyer's perspective. Obviously, seller wants the most that they can get. Buyers are reassessing what they're going to do in the market, what they're looking for, what they're willing to pay in the current market. So that's definitely a big part as well. If less buyers, less demand, obviously this is gonna impact sales and price, right? And then the third point is obviously interest rates. They're definitely going to be making a difference in the market. As I mentioned, next interest rate announcement is April 13th. So definitely be aware on that, how that's going to affect the market even more. The Bank of Canada's policy plays a huge factor in home prices and financial asset prices, so please pay attention. And I know you will, because obviously it affects our mortgage rates, and you're trying to get obviously a great mortgage rate at a fair price and obviously something you can afford. So I hope you found this content helpful. I'm going to continue next week on the budget and continue to see what the first early signs of April are. Obviously, we're full swing into spring here, and I hope it's some great weather and obviously some opportunities for everyone listening and watching here today. So I appreciate it. Please subscribe. I'd love to hear some feedback. Give me a like, a thumbs up. And also, you can follow me on Twitter. You can follow me on Instagram. My links or my handles are below in my description. Again, if you have any questions, you're curious about something, leave a comment or reach out to me directly, and I'll love to chime in and share my perspective. So have a great rest of your day, have a great rest of your week, and we'll chat shortly. So thank you for your time.